Welcome back. Thanks for staying with us on Editors Roundtable, where we're rounding up the week. It's been a week of consolidation, of course. Now we have the budget behind us. We have the interest rate cycle. Perhaps it's the end of that. So let's see how markets are being approached. Pramod Gubbi is joining in. He's the co-founder of Marcellus Investment Managers. Pramod, thanks for being with us. That's the big question. Most investors globally and locally believe that the worst of the rate tightening cycle is now behind us. If that is the case, do you think the Indian markets are moving upwards or trending higher as we move along?
Well, I mean, what happens in the short term is beyond our purview. But if you take a 3 to 5 year view, I think we position very strongly, both from an economic standpoint as well as from a market standpoint. The economy, as we know, we've been waiting for a capex cycle. We are perhaps at the beginning of that cycle. We've also seen the credit cycle pick up again. These are very early days. So you can look for both in terms of capacity creation, which in turn will have knock-on effects on job creation, disposable incomes, and consumption. So in every which way, the economy is looking good. But more importantly, I think the way foreign investors are looking at India has taken a change for the positive. Clearly, India foreign investors are looking at India in brighter light, given what's happened elsewhere as well. To that extent, we can expect this economic growth or recovery to attract that capital, which in turn should keep them in good show for the next 3 to 5 years.
All right. Hi, Pramod. This is Nigel on this side. Pramod, in the 3 to 5 year period, obviously, India is finding some preference. And some moves in the near term, they work in your favor, some don't. Now, I think, y'all had exited or lightened your position on ITC, and I think y'all had loaded up further on into HDFC Life. In the near term, it doesn't seem to be working out, but there will be some rationale out there. So give us your take, particularly post the recent changes in the life insurance space.
Yeah, absolutely. Of course, when you're managing a portfolio, the whole idea of managing a portfolio is to diversify. Not all bets work out. But so far, clearly, it hasn't worked out. Our reasons for exiting ITC was one of less than ideal capital allocation, given the cash that's accumulating on the balance sheet is creating a drag on returns on capital. And returns on capital is one of the core aspects of our investment philosophy. We like businesses which drive significant high returns on capital over cost of capital, at the same time are able to deploy that excess profits back into the business to fund future growth. That was our concern with ITC. The fact that HDFC Life hasn't worked out, of course, what happened earlier this week in terms of the budget is a matter of concern, no doubt, because life insurance, particularly from a protection standpoint, which is the term insurance policies, not the investment products, is significantly underpenetrated in our country. And to that extent, it is considered as a sunrise sector. And most sunrise sectors do require some sort of incentive from a government's perspective, either in the form of taxation or otherwise, to build that penetration, particularly in a country like ours where there's no social security. Increasing penetration of life insurance is a social good. To that extent, we were a bit surprised with that move. Having said that, there are other investment products within life insurance clearly do not require the same amount of tax benefits as a driver. But given this level of underpenetration, we reckon there's plenty of growth. We do require increased awareness amongst consumers to buy protection and protect their family's future should something untoward happen to the bread earner in the family. But you do require some push or nudge from the government in the form of incentives. So we're quite positive on that aspect of the life insurance sector.
All right. Pramod, I wanted your thoughts with regards to the entire PSU banking space. That was a clear outperformer in the previous year. Now there are fears that maybe there could be chinks in the armor when it comes to asset quality. Would you be as bullish in terms of the PSU banking space as investors were in the previous year? And do you think that threat on asset quality could probably be a formidable one?
Well, I mean, it's the early stages of the credit cycle. Typically, the asset quality issues come towards the end when you've had a strong period of credit growth and when you've had repayments due from borrowers and the business cycle is turned downwards, which curtails that repayment capability. So I guess we are a little while away from those asset quality issues coming up. But from our perspective at Marcellus, we are longer-term investors. We take a longer-term view to the extent that historically PSU banks have had issues around asset quality on a cross-cycle basis. Even if it means that in the shorter term those issues may not come in, we are unlikely to get any exposure to PSU banks. More importantly, we also look at cross-cycle ROEs. So we require ROEs to be greater than 15%. We believe that's the rough cost of capital in this country, to the extent that most PSU banks are still not delivering ROEs north of 15% on a cross-cycle basis. We stay away from that.
Hi, Pramod. What about IT? While near term we all know about the headwinds, but with the longer term view, are you looking at buying into IT space? And especially within IT, will you bet on the mid-cap IT because they've corrected sharper than the large-cap IT names in India?
Yeah, so, I mean, they've corrected sharper, but they did well also in the upcycle. To that extent, it's sort of normalized. Yes, from a longer-term perspective, we continue to be bullish on IT services. We reckon the digitization, the shift to cloud computing, and now with artificial intelligence also coming in, I think all of our lives will be surrounded by some aspect of digital, which requires to be managed. And Indian IT services have clearly demonstrated their ability to do this over the last 4 decades. I don't see any reason that should change. Between large and cap, we've always maintained IT is more of a supply side issue as far as competitive advantage is concerned. Because technologies continue to change quite rapidly, be able to hire and train engineers and retrain engineers becomes a critical aspect of competitive advantage. So amongst the larger ones, we've seen both TCS and Infosys have built massive training infrastructure, and that ability to get staff into projects very quickly on new technologies becomes a critical competitive advantage, and hence we prefer these over the remaining companies.
All right, Pramod, final question before we let you go. We're getting into a weekend, so let's lighten up the mood a little bit. Paints will have been positive on, the largest paint company out there. But what about Daru? I mean, what about some of these, alcohol beverage companies out there? Some have disappointed. Some of them have immense potential. But your take on them?
Yeah, I mean, it's one of those classical things, right? Often people chase growth. Not everything that with high growth will actually make money for investors. You also need to consider the other aspects. In this case, of course, there are companies which are dominant as far as competitive position is concerned. But the regulatory aspects of the alcohol industry has always been a concern for us. Where the value gets captured, whether at the company end or the taxman's end, is always a bit of concern when it comes to heavily regulated industries like this. To that extent, we've stayed away.
Sure.
But otherwise, there are some very fabulous companies with very strong brands and competitive position. But yeah, the government and the regulatory interference is something that has made us wary about it.
Okay, time to perhaps go and sample those strong brands, right? With the weekend coming up. Thanks a lot for joining in and have a great weekend. And folks, thanks for watching Editors Roundtable. Any weekend plans that you guys have?
I don't have any plans. Sorry.
I have a lot of earnings.
Consumption story.
Consumption.
I think you should do something for UBL. Yeah?
Participating in the consumption
I was shocked
story.
this morning when they said that it was a disappointing set. I said, we didn't do
Worst
enough.
quarter in almost like 2 years now.
Maybe it was the winters.
Okay, guys, take one for the team. Come on, you can. Well, with that, it's a wrap on this edition of Editors Roundtable. Thanks a lot for watching. Have a good one.